For Morningstar, I'm Jeremy Glazer. Is the stronger dollar justified, and what impact is it going to have on the United States? I'm here with Bob Johnson. He's our Director of Economic Analysis to take a closer look at these questions. Bob, thanks for joining me.
It's great to be here today.
Let's start by putting kind of the rise of the dollar in context. What's the best way to look at it, and just how much is the dollar up over, the last year?
Yeah. Well, the best way I think to look at it is on what I call a trade-weighted basis, which says, well, with our trading partners, we're up really strongly versus this one, but it's not much of our trade thing. How do we weight these? And so it's by the amount of trade that we actually do with that country. And right now we're at about between 17 and 18% on a trade-weighted basis year over year on the dollar. So it's really had a pretty dramatic move. And we're certainly on whatever day you look at, we're probably pushing 20%. And we've only had that 20% move 5 times since 1970. So, kind of almost over a 45-year period, we've hardly, we've very seldom seen this kind of 20% move, which we are seeing right now.
This is a rare event then. Is it justified, or is it more speculative? Do you see real fundamental reasons for the dollar to be this strong?
You know what? I think the dollar should have been strong sooner, and I think there are some very real fundamental reasons that it's now come back up again. And I think it's up for all the right reasons. With foreign currencies, things always tend to swing too far and tend to kind of move all at once and catch up for things they've missed over the years. And certainly we've been talking forever about the oil situation here in the U.S. and the rising production here and what that's done to our trade deficit, which is, frankly, usually hurt our GDP, because usually when the economy grows, we pull in a bunch of oil. Well, this time the oil is coming from the U.S. itself. And so we've had a major improvement in the trade deficit situation, and that's one of the absolute drivers of the strength of your currency, because obviously the more things you do internally and the more people want your stuff, the higher the demand for dollars, and it causes the price of the dollar to go up. And so certainly that's been something that we haven't seen, and finally we are. Then the other two things would be the relative interest rates. We've talked many times about Europe and the QE and what that's done. I mean, Italy this morning, I think, which was one of the riskier European economies, has a 10-year Treasury rate of 1.2, and we're kind of over at the 2% level right now here in the U.S. So clearly there's a huge spread, and that's causing investors to kind of let me invest in the U.S., let me add it. And again, to buy those things, you first have to use dollars to go buy that stuff. And so it's clearly helped put the dollar up as well. And certainly the other thing that we're seeing in the data is the GDP momentum. Clearly, most countries in the world are kind of slowing down a little bit, not doing as well as they were. Even last week, we saw China, which was growing kind of at one point as high as 10% 5 years ago, growing more like 7.5%, and then last week they came out and said it's more like 7%. So clearly, and at the same time, the U.S. has kind of like gone from 2 to 2.25. We've seen a couple of even better quarters, which really mean the U.S. is gaining momentum. And so again, when you've got that strong internal demand and people wanting your stuff, that's when you tend to have a stronger currency. So really the stronger dollar is supported by fundamentals. But in some cases, like against the euro, or where it's 105 or 106 versus 140 a year ago, it's really dramatic. You got to ask, how much further can it go?
So if we do think that the dollar move is justified, at least somewhat, could be with us for a while, what impact is this going to have both on the positive and on the negative side?
Yeah. Well, the really positive news is probably psychological. I mean, the U.S. has kind of regained its real strength as a powerhouse leader. I think for a while there was some thought that, well, U.S. is deteriorating, the rise of China, let's use the China for a currency, or use the euro for the reserve currency instead of the U.S., and now all of that kind of has gone by the wayside. I just saw an interesting note that the foreign reserves, 60% of those held by other central banks, are in U.S. dollars right now, versus the U.S. being 25% of world GDP. So it's kind of a pretty interesting phenomena that we really have regained some of that strength. So that's certainly been an important factor. But then, and it certainly kept inflation down in the U.S. As we import goods, which we import a lot of, they're now at lower prices. So it's really aiding the fight against inflation here, and it's making the U.S. Dollar go further. And it's great for foreign tourism. I mean, this is the time to go visit Europe or anyplace else. We've had a number of people at Morningstar go overseas, and they're all reporting back what tremendous buys they have. So that's really kind of a very interesting situation.
But on the negative side, that isn't all good news, right?
Absolutely. Certainly, anybody that has a foreign investment, a foreign mutual fund, a foreign stock, even if that stock or currency is done well in that local market, it translates back to fewer U.S. dollars. I mean, it's kind of a 20% headwind that you've got to face almost up front for an investment that you've got overseas. So it's a pretty tough situation there. And certainly it's affected corporate earnings. We've seen on that front, maybe when you adjust it for all the right things, overseas might represent overseas sales, should be about 25–30% of corporate S&P 500 sales. Well, to have that come in 20% is a pretty big deal. And you can hedge some of that away, and certainly not everybody's oblivious to it, and they've made some adjustments, but over the long run, that's a pretty big move. And it's begun to affect corporate earnings. We see a number of earnings reports. People are saying, well, we would have done better. And, be it Procter & Gamble or even Walmart, who has some operations overseas, are reporting on this phenomena. So clearly, corporate earnings are taking a little bit of a hit from this overseas phenomena, and I think it's probably a little bit broader than people expected. We went through this period 2010 through 12 where the S&P earnings did really well, and the U.S. economy just did kind of so-so, and now we're coming into a period where the U.S. economy is doing well, but S&P 500 earnings not so much because of this foreign factor in the numbers that people have to remember.
Okay, Bob, well, thanks for your thoughts on the dollar today.
Thank you.
For Morningstar, I'm Jeremy Glazer. Thanks for watching.